Hello, everyone. This is Simon with AvaTrade. Welcome to our weekly webinar. And of course, the special welcome is to new people. As you could read in the title, your weekly trading plan, that's exactly what we're trying to do. And my favorite phrase is you plan your trade and then you trade your plan. And that's what traders are using. And I think in any aspect of our lives, if we are spending a little bit of time to plan things, we could probably see a better success, especially in trading. A few things about myself. This is me, Simon Friedman. I'm a senior account manager with AvaTrade. I started to trade in June of 2000, and since then I've been really fascinated by markets. I love markets, and I started as a prop trader. I did it for about 11 years. Then I moved into a less stressful environment, and I started to mentor and educate other traders. And I'm very happy that I have an opportunity to assist our customers currently. The agenda of the webinar, we usually go through indices, stocks, commodities, forex. We speak a little bit about the big picture. We discuss economic calendar, and that's exactly what we'll be doing today. Risk warning. What we'll do here is purely educational. You can find a full statement at avatrade.com. These are the channels that I highly recommend for you to connect to. You have Telegram, you have Twitter, and my favorite, as I always say, YouTube channel, which is updated daily. You have a lot of educational materials, you have tutorials, you have webinars are being posted there. So if you did miss the webinar, don't get upset. You can subscribe to YouTube and be updated when new things are coming up. Also, please like if this is useful. Please share it with your friends, and please leave the comments. That would be great for us to receive. Okay, so before we go into economic calendar, I just want to kind of summarize what happened last week. We had an eventful week. And of course, the highlight was the FOMC interest rate decision, followed by the press conference. So, as you know, the rates remain the same as planned, as priced in, and everybody was really waiting for the Powell to say favorable things for the markets, and everybody was expecting to hear something that the cuts will come soon and so on. And apparently, I mean, normally it's the same direction of the Feds. The agenda is to bring the inflation down, of course. So there could be another 0.25% hike on the way. And more than that, it looks like the cuts are not coming anytime soon. So for 2024, that it looks like it's going to be a total of a half-point rate reduction, which will bring the rates to about 5.1%, which is just a little bit lower than today currently. So as you know, market reacted not in such a great way. Market sold, stocks went down, indices went down, and we'll take a look at it at the moment when we go to analyze things. So that was one of the highlights. Another thing, there were also another 3 interest rate decisions, at least the major ones: Swiss franc, a British pound, and yen were affected, especially Swiss franc and British pound, as Bank of Switzerland and Bank of England, by surprise, didn't really increase the rates, which was expected and priced in. So Swiss franc sold and pound sold. And Japanese yen, as planned, they didn't do anything. And I guess the expectation of the increase is still in the air. We have some data from Japan we'll go through in a moment. And that's all pretty much. So we had 4 major decisions, again, from US, Switzerland, UK, and Japan. Okay, let's go to economic calendar, and a few words about the economic calendar, especially for new people. I believe it's important to know about these events. It is all public information. Everybody knows about it. especially major things like FOMC, interest rate decision, and other data that affects the market in a strong way. So by being aware of this, again, to make sense out of it, it's a little bit hard. Just to give an example, last time um, European Central Bank increased the rates and euro went down. So sometimes certain things don't make sense, but just the idea of the fact that certain events are coming at certain times, it's important. So you can make a decision to trade, not to trade, wait, and so on, or just observe whatever you like. But this way, you're really in control as far as understanding that certain things will be affecting the markets. So another thing here, I take out only the high impact events. There are more. You can filter through them. You can find economic calendar in our web trader or the app, or you can just Google it. There are a lot of providers of this information. As I said here, I just take out the excuse me, the high impact events. So let's just go through them really quick. On Wednesday, we have consumer price index from Australia, followed on Thursday by retail sales from Australia, CPI numbers from Germany, GDP or gross domestic product from US, and we have speech of Powell, which is, of course, every time he speaks, the market shakes. So important to know. By the way, the times here, I chose the GDP. So we have Fed's chairman speaking on Thursday. Like I said, when he speaks, the market is shaking. So again, maybe we'll hear something new. Maybe we'll just hear the same song of Powell. We have CPI numbers from Japan. And that's what I mentioned. Just to go back a few weeks, Bank of Japan announced that because of the inflation, maybe towards the year, they'll start increasing the rates. As of now, the rates are negative minus 0.1%. So any data comes in could push Bank of Japan to actions. So this is the data that they'll pay attention. The same thing, the Feds are paying attention to CPI in US. So that's on Thursday. Friday, we have GDP numbers from UK. We have retail sales from Germany. We have CPI from European Union, and the numbers also that the Feds are paying attention to. That's the core personal consumption expenditure from US. That's on Friday. And we finish the week with Chinese PMI numbers, and that's on Saturday. Okay, so again, this is the economic calendar. Just the high impact events. There are more. You can filter through them. You can see what's relevant to your trading. Okay, so that's the economic calendar. Now, let's move. I'm going to get back to this slide. Let's move first to the MT4, and we start looking at reaction to the market. First of all, Chinese market reacted to the upside. I guess we might see Monday reaction of the Asian markets, maybe catching up with the US because that press conference came after the Asian markets were closed already. So in China, Friday was a strong day. I didn't really find the reason for it, just maybe the bounce after being sold here, after reaching maybe a support. But it was a strong move to the upside. We raised the previous probably week of selling, and we hit 150 moving average. So let's see if this move sustainable. As you know, China is not doing that great. And we'll see, as I said, Monday, we might be seeing China gapping down following the sell-off in the US markets on Friday. Okay, so that's China. Let's take a look at the US markets and how they reacted. So Dow Jones, the whole week, we had pretty much every day was a red day, as you could see here. And we reached support around 34,200 that we faced previously. As you see here, Thursday was intense selling after the FOMC meeting, and we are sitting on that support plus 500 or US 500, S&P 500. I always get this thing mixed. That's the US index, S&P 500. So we are also facing a support here. We did close below. Let's see if we continue here. We're below the 50, 100, and between 100 and 200 moving average here, and we are on support. That's the S&P 500. NASDAQ, similar idea. You see all three indices are kind of holding into that previous support, and we are between the 100 and 200 moving average. European indices as well. They sold Friday. They were a little bit in green. DAX also sitting right on 200 moving average, and also on the support around 15,600. As you could see here, we bounced from here back in July, and then we were playing with that level on a few occasions. That's the August 18, then again August 24th, and in September we were trying to break that and we couldn't. So another occasion on Friday we hit that level. The low on Friday on DAX was 15,595, and we did close above the 15,600. So that's our support on DAX. UK 100 or FTSE, it's holding. I think the decision of the Bank of England not to raise the rates help FTSE a little bit here. And again, just a few words about the decision. Even though it was expected to increase the rates, but previously the inflation data showed a little bit of a weakness or slowing down, and a lot of analysts start saying maybe it will give a reason to Bank of England not to raise this time, and that's exactly what happened. So it was in favor to the markets. As you could see, FTSE is holding pretty strong here. And here you go, the French index is also sold, and it is below the 200 moving average. So you could say that this week has been not so positive for the indices, especially US and European indices sold. And on US indices, we are sitting on supports, and this week we'll see how we start. If we see continuation lower, or we see the bounce from these levels, that will be determined this week. So that's as far as indices, and we'll move to stocks. And I want to start with Tesla, actually. I'm going to bring this less crowded chart. So as you see, Tesla has been selling, and Friday was intense selling here. Of course, a lot of it to do with the markets. As I always say, in the falling market, even the best stocks are falling, and in the running or bullish market, even the worst stocks are moving higher. But in this case, I just did some research on Tesla. I just want to show it to you here really quick. Okay, so I just took a screenshot from the article. You can find it on marketwatch.com. So let's just read it together. It's a short few paragraphs here. Tesla stock is limping over the finish line this week. China is the most likely reason. Okay. Shares were down 3.2% late trading Friday, while S&P 500 was off 0.2%. Nasdaq Composite rose about 0.1%. So as you could see, that the indices, some sold, some were a little bit pretty much flat, but Tesla was down 3.2%. So here comes the numbers. From June through August, Tesla sold about 13,000 electric vehicles a week to Chinese car buyers. September sales have dropped to about 9,000 a week, so from 13,000 to 9,000, according to insurance registration data collected by Citi analyst Jeff Chung. Fewer retail deliveries in China will make it difficult for Tesla to hit the consensus call among analysts tracked by the FactSet. that the number of the third quarter will come to 463,000. Okay. Expectations have been coming down. The average Wall Street estimate was about 473,000 a few weeks ago. Tesla delivery estimates tend to come down heading into the end of quarter, but the slide to 463,000 would leave deliveries below 466,000 Tesla achieved in the second quarter. So obviously the numbers are falling, right? Let's continue. Tesla took some planned downtime at factories in the third quarter, limiting production. The company also is introducing the updated version of its Model 3 sedan in China, which is also leading to reduced sales of the car this month. Tesla sold about 240 Model 3 sedan in China from September 11 to September 17, while the typical figure is between 2,000 and 3,000 a week. You could see a huge difference, right? Between 2,000 and 240. That's 10% of the regular sales, at least. That trend should reverse in October when the newer version starts shipping. Tesla is expected to report delivery around October 2nd. Okay, so we'll be watching that, followed by earnings a few weeks later. The consensus call on Wall Street is the third quarter earnings per share of 79 cents, down from 91 cents in the second quarter, and $1.05 in the third quarter of 2022. So you see the third quarter is consensus is about 79 cents, and last year it was $1.05. Price cuts and competition in China continue to weigh on profit margin for Tesla and all Chinese EV vehicles. Okay, so what do I take from this article? Definitely, Tesla is not looking good in China, and the stock sold, as we see here, 3.2%, as the article mentioned. But also it shows that China is not doing that great as well. That's why I was surprised in a way to see this bounce over here. And of course, if the economy is not doing that great, and as I always say, when people have a hard time buying the necessities, they're not going to run into buying new electronics and new cars and so on. But for Tesla, it looks like it's an alarm call here. And technically speaking, we closed at 244.99. And if you remember, when we spoke about Tesla, we mentioned this level around 240. So the analyst also saying if we break 240, we might continue sliding here. And that's obvious if the projection for the sales are really, really low. Okay, so that's Tesla, something to pay attention to. Also, something, as I mentioned all the time, is the Apple stock as kind of a leader in the market. So I'm watching the stock. It is holding so far this level around 175. Let's see what the market in general is doing. Apple is holding, like I said, around 175, and the big disappointment came right here with the issues with the sales of Apple. And of course, when they announced the new product of the 12th September, that didn't really excite the analyst that much. So we'll definitely be watching Apple as an indication of the tech stocks. Another thing, Netflix. We haven't spoken about Netflix for a very long time. The stock's been selling after hitting around 450. We've been going straight down, and it looks like here around this price, around 379. If you take weekly chart, we are testing this weekly level of 379, and we're right there. So this level here, there was the resistance, the peak from the up move. We hit the high of 379.15 before we retraced and moved higher. So it looks like we might be seeing some support around these levels. And if not, we might be sliding lower. But this level around 379, it's worth watching for Netflix. Again, a scenario when the market bounces could actually bring the Netflix higher. we're talking about technicals. I'm not sure what's happening fundamentally there, but the stock has been really, really selling. Okay. Boeing is the other one that's been kind of falling vertically, and we just broke all three moving averages. If you remember, I think I mentioned last week, not sure if on this webinar or on the other, that we are testing the 200 moving average here. And at the moment we broke through it, we're just falling. And we're coming into the area where there was a lot of accumulation, around $197, $198. And let's see how Boeing acts here. We had 3 consecutive weeks with a huge sell-off pretty much. Right, so definitely we'll be watching that. Another sector is the banks. Sometimes we'll mention them. They showed a little bit of recovery the week before, and today, or this past week, we came right back where we started. This is Bank of America. This is Goldman Sachs, JP Morgan, Citigroup. All of them are selling, some more, some less, but the sector, the banking sector, is not doing that great. So something to watch in the upcoming week. And Teva Pharmaceutical, the stock that we've been watching, had a very nice week. The previous and this week we had a nice correction. Nothing alarming. We're still about $10. We're close to 10.35. And just to remind, especially to mention to new people, why we speak about Teva, that I mentioned a while ago that Teva's troubling between $7 and $11. So we start talking about it when we were on here. And steadily the stock moved higher. And we are holding that now. And I mentioned to you the monthly chart that we're trying maybe this time around to break through this strong resistance zone and maybe start a nice move. Just to mention that back in 2015, stock was at $72, and it's a serious company. Again, they produce generic pharmaceuticals. And maybe after a long time of consolidation here, the stock will decide to break that 11 and move higher. We'll see. Okay, so that's as far as stocks. I'm not going to go through all the major stocks as they sold pretty much. Maybe worth mentioning AT&T again. If you remember last week, I mentioned that there were some large buy positions were seen on the market, and traders noticed it, and the stock moved significantly, and the volume increased. So Thursday and Friday, the stock went down with the market, but it is still holding to this recent gain. So we'll be watching. Maybe some news will come out of it. Okay, so let's move to commodities. We start with oil. Again, just to mention that oil has been super strong, and the main reason is the shortage of the supply. Just to remind everyone that OPEC, Saudi Arabia, Russia, they announced that they will keep the low production level into the end of the year at least. They used to update it month to month, but now they just said, forget it. We'll just keep it to the end of the year. And that was the signal for the oil to move higher, and we're really holding to those gains. We hit this week, the beginning of the week, we hit 92.40, and we closed at 90.33, obviously here. So let's see if that fear continues. If we are, as I mentioned to you last week, the CEO of Chevron said that he sees the price reaching $100. But I always look at it from both sides. So immediately when I read that article, I looked at Chevron stock. Chevron stock didn't really react strongly to the gain of the oil. So it could be anything. It could be his selfish interest, not to judge anyone, but maybe he just throws those statements hoping that the stock will react. As you could see, the oil was really strong, and the Chevron is really not breaking these recent highs. Unlike Exxon reacted very nicely to this recent move to the upside. Okay, so that's on oil. Natural gas, our friend natural gas is still doing the same or playing the same game. Let's bring it here. We're still playing with this 260 level. We had a nice attempt this week. We hit as high as 287, and then the following day was flat, and then we sold, retesting 260. So it looks like we're holding 260. Again, will we move higher and retest 3? It could be. Will we dip below 260? Also possible. But as of now, we are holding this 260 level. So there are chances of moving higher here. But again, the opposite scenario is possible as well. Gold. Gold was doing very nicely before the press conference. We hit 1947 level here. And then when the announcement came and the press conference, dollar skyrocketed and gold sold. So we're still in between the 1955 and 1900, sitting right on 50 moving average here on gold. Let's see what this week brings. Now, another thing, we hit highs on 10-year yields. I think we hit the 450 level, and that also pushed, of course, gold lower. Let's see how that level holds this week. So that's as far as gold. Now, silver, on the other hand, didn't really sell that much. So I just noticed that silver is gaining some momentum here, even though the gold is selling. So we could be seeing continuation, because normally the silver would really follow the steps of gold. And here we actually had 2 strong sessions, Thursday and Friday, on silver. So whoever trades silver, it's worth watching. Maybe there is something cooking there. Okay. Let's move to Forex. We start with dollar index. As we mentioned, this is Wednesday with the press conference, the move to the upside. It's right here, as you could see. The moment Powell starts speaking, that was a huge move to the upside, and we are holding to those levels. And that means that there's a potential of continuation. Also, as you could see here on daily chart, something that I mentioned sometimes, in this case, it's a golden cross. We just crossed the 50 moving average, crossed about 200, which in a classic technical analysis, some analysts are using it as a signal for buying. So let's see if this is the case. Let's see if dollar decides to move higher. If you move to the weekly chart, we are challenging this previous resistance here, from which we made the lower low. And we did actually close this week above the 105.25, just a little bit. We closed about 105.26. So we could be actually seeing that move. We have a lot of evidence. So we have golden cross, we have fundamentals towards the dollar, and on the weekly chart, we're challenging this previous resistance. We might see that move to the upside. So that's on dollar. Of course, other currencies, the majors, I'm not going to go through them. They are selling. I just want to go back to the decisions from Bank of Switzerland, Bank of England, and Bank of Japan. So all 3 of them didn't change the rates, didn't increase the rates. So for Bank of Japan, it's kind of normal. They didn't. I mean, we didn't expect. It was as expected, no change. But Bank of Switzerland and Bank of England, they were actually priced in for another hike in interest rate. So when they didn't happen, the currencies really fell. So let's take a look at dollar Swiss. As you could see here, it's a nice move to the upside. I'll just catch, this was the decision right here. So you could see when they announced there's no change, even though the expectation was for another increase. So for the week, Swiss franc and British pound were the weakest, and for some reason New Zealand dollar was strong. something that I paid attention to. So when you take New Zealand Swiss, which takes the strong and the weak, as you could see, we had a nice move. And if you remember, I spoke to you about the New Zealand, this pair specifically, that at some point we'll see a nice move. So this is a very strategic level right here, level of resistance. And the high here is 0.5418. We closed at 0.5405, and the high was right below it, 0.5417, a pip below this high of this resistance. So we might see actually breaking through that level and continuing. As you could see here, we're trying to move higher from the huge sell-off that took a long time. So that's New Zealand CHF. Now, another one that I mentioned to you, CHF JPY, finally broke through. We were sitting on 50 moving average here, and we broke to the downside. We broke to the previous support that was a resistance back in July. We had a little bit of a bounce on Friday, but we are below that 164 level. And just to remind us again, it's not a wishful thinking, of course, but we could be coming to this level, 159.88. And if you remember me mentioning it weeks back, this is the level from 1979. And as you could see here, we did have a retest back in end of July of that level. And now that we're back into this channel between 159.88 and 164, we actually might see that drop to the downside, or we might not. Of course, the opposite scenario could be we might have some great news from Switzerland or whatever hypothetically could happen that we bounce right back. But it looks like, if you remember last week, I mentioned we started to make a lower highs here, and that surprising decision of Bank of Switzerland pushed it lower. So, of course, ideal scenario for this pair would be that if we have surprising increase in interest rates from Bank of Japan that takes interest rate from negative zone of 0.1% into increasing the interest rate. So we might see this pair actually going retesting this level, and that could be a nice potential of continuation. So that's on Swiss franc. Now pound, of course, you take any pair against the pound, you could see the pound is super weak. We just hit the level of March of the current year, as you could see here. We closed at 122.29 on Friday, and again, similar to Swiss franc here, Bank of England was supposed, or it was planned to another increase, and they didn't this time around, and the currency reacted accordingly. So again, just to put it all together, Swiss franc is weak, British pound is weak for surprising decision not to increase. And of course, yen is still not being changed as far as the interest rate. This is the daily chart. We're still hitting this 148.35, 3 days, consecutive days to the upside. Again, at some point, we'll see that decision from Bank of Japan. It has to happen sooner or later, and we'll see the reaction. So that's as far. And I think pound yen logically should be also selling. Yes, as you could see here. All right. So that's as far as currencies. And just a few specific ones that it looks like the levels are significant. Right here on Euro GBP, first of all, we just broke the 200 moving average. We closed above. Second of all, we are challenging this resistance, the high of mid-July, which was 0.87. We are maybe 2 pips shy of that level, a few pips shy of that level. So definitely Euro GBP worth watching, either for continuation or finding resistance and falling from these levels. That's something to watch. And the last one that we mention sometimes, USD Hungarian forint. We started fundamentally this trade back somewhere here in July. I start mentioning it, and as you could see here, we look very strong on this pair. Of course, the strength of the dollar is the main reason, and we just broke through the previous resistance here. It could be that it's opening the way for a strong move to the upside, right? So that's USD Hungarian forint. And let's take a quick look at cryptos, Bitcoin. We were sitting here for a while. There was a nice attempt. If you remember here, I mentioned the news of that ETF, which ended up being just, it is news, but not so solid. And then we came right back. We came to retest 25,000. We dipped below on September 11, went to 24,897. And since then, we've been moving nicely until we hit the 50 moving average here. And on the 21st, we moved down and we're pretty much flat over here. So, and again, here we have the opposite of what we just mentioned. That's the dead cross that it looks like we crossed around September 11. The 50-day moving average crossed below the 200. So it also one of the reasons that analysts are using as the sell signal. So we are sitting pretty much steadily here at 26,500. Let's see what's next. All right. So let's just summarize things. So we had an intense week, which we just finished with the Fed's decision at the central banks. Markets got disappointed that the whole expectation was that the Feds will start cutting the rates sooner, and it looks like it's not happening. It's being pushed. And we have possibly another interest rate increase this year. We have some data coming up this week. Tesla is the highlight, as we mentioned. The stock is selling, and the big reason is huge. I wouldn't be afraid to use this word. A huge slowdown in sales of the cars in China, and definitely worth watching what Tesla is doing. And the pressure is to the downside, and the dollar is strong. It's moving strongly to the upside. Gold reacting in the opposite direction. Also, I forgot to mention the VIX. This week, the VIX moved from about 13.5 to 17.5. It's a huge move to the upside. As you could see, the volatility did increase. And we'll see how this week ahead of us, how this week holds and how this week plays for the markets. I want to wish everyone a great weekend, whatever's left, and get some energy, get some power, make it a successful week, and I wish you all the best.